Welcome to today's webinar. Today is the day 4 that I'm sharing the tax tips to help you to reduce your tax this financial year. As you know, tax time is coming. It's if you are a business owner or investor, this webinar is very important to you. So I suggest that you should come in and listen, because what I'm about to share with you is the most important things that you should know. Basically is to get the right business structure for your either for your business or for your investment assets. Because if you get the right business structure, then it can help a lot. It can help you to pay less tax. Not only that, the most important thing is to help you to protect your assets. So this is a very important topics today that I want to share with you. Whatever that I share with you today is more for general advice, like general information only, because I don't know your personal circumstances. So if before you act on anything, it's better that you seek professional advice. And whatever the information, whatever the example that I share in this example is just an example to let you understand more the concept of why you should get the right business structure. So before I go on, for those that don't know me, my name is Eng Si Viang, and I am the founder of TMS Accounting Firm. We have been in this industry for a long time now. We have established this business since 1993, which is a long time ago. And our focus is to help a family business just like us, and also investors to help them to protect their assets and reduce their tax, protect their family wealth. It's a little bit about me that I have all the qualifications. So I'm a fellow of certified practicing accountant. I'm also a fellow of self-managed fund specialist and a registered tax agent, and also an authorized rep for Merit Wealth. The other thing that I forgot to mention is that I can speak 6 languages. Chinese, like Mandarin, Cantonese, Teochew, Lao, Thai, English. As you know, in Australia, there's only 5 type of structure, but today I'm just going to talk about this 4 type. It's purely for business and for investor. It's very important you to get the right business structure. So let me just sort of explain to you what these 4 types. As a sole trader, so it's like individual. A lot of people when they first start business, because they want to make it easy, because it's very easy to set it up. It's just you, and it's only one tax return. A lot of people just set it up as a sole trader to start with. And especially now with the COVID-19, a lot of people, maybe they're out of work now and they like to start their own business. And then normally they started with sole trader. To me, it's very risky, because even though it depending on what stage that you are in, if you already build up valuable assets, you already build up a lot of assets, you have a lot of properties, just because you want to start up a business and you say, I just want to make it simple, easy to start as a sole trader, that is actually very dangerous. And I will tell you why. I know it's easy. So a lot of time, people say something it's easy to start, it will be hard later. And I will explain to you why I mean by that. So sole trader basically is just you, and it's only one tax return. There's no assets protection at all. And the tax rate is very high. It can be up to 47%, which is your own personal marginal tax rate. It's not a very good structure if you want to be in business or you want to use it to purchase another property and so forth. Partnership, depending on partnership is like it can be two people joined together or 3 people. But partnership, it depending on who you use to be partner. If you use yourself and your friend to be partnership, then the liability is going to be sharing. Because whatever that your partner did something wrong, you'll also be liable as well. So the risk is very high, but it depending on how you form the partnership. But if you, let's say you set up a 2 trusts, like each of you have a discretionary trust each, and you use that 2 trusts to form up a partnership, then that's okay. With the structure, you have to be a bit creative, even though it's just these 4 type, but you can mix and match. It depending on what you want to do. A partnership doesn't pay tax, but you have to do partnership tax return. And from there, you split the income according to your percentage of the partner. You do 2 tax return, one for partnership tax return, and then you split the income down to depending on how many partner, and each of the partner, the money will go into the individual. Distribution will go to the individual. Then you do your own I return. So it's like a two tax return. And the third one is the company. A lot of people very familiar with company. Company, it's a separate legal entity. The tax rate is very good now. It's only 26%. And basically, if you set it up as a company, and if you're working in the company, you are like a employee. You can be the shareholder of a company, or you can be the director of a company as well. And the company have limited liability, so it's not a bad structure, because a lot of times, sometimes you just have no choice, because if you're setting up as a company to deal with other people to do business, sometimes it's more easier. It depending on what you're going to do. Companies also got assets protection as well, but it depending on who's the shareholder of the company. Because a lot of time when you set up a company, people just put yourself as a shareholder of a company. If you put yourself as a shareholder of a company, then there's not much protection there, because if somebody trying to sue you, you own the share of a company, then the share is part of your assets, so it can be at risk as well. When you set up a company, you also know who should be the shareholder, who should be the director. It's all very important. The next one is trust. Trust is my favorite, because it's just got everything that we need. It's got assets protection. Trust doesn't pay tax. Trust is just like a holding the assets on your behalf. At the end of the year, when whatever the profit that make, it has to distribute out to the beneficiaries. Beneficiary can be all your family members, including your moms and dad, your parents, your mother, your father, your mother-in-law, father-in-law. Like, you can including a lot of people as your beneficiary, and then also you can include bucket company as well. So it's very flexible in terms of tax. You can split the income, and it's very flexible. It's very important that when you get into business, like when you want to set up a business, when you want to start up a business, or when you want to buy property, it's very important to choose the right business structure.